Morning students, how are you all? Hope you all are doing good. Okay students, are you ready to learn today's accountancy? In accountancy, today we are going to complete the last lesson, not the last lesson, the sixth lesson. Last session, journal proper in the subsidiary books. We have learned many subsidiary books. In that subsidiary books, we cannot enter all the transactions of a business organization. Okay, if we are not able to enter some transactions in the subsidiary books, what are the subsidiary books? The purchases book, sales book, purchase returns book, sales returns book, bills payable, bills receivable. In all these books, we cannot enter all the transactions. Here, the repeated transactions, if we purchase or sell, we enter in those books. But some other book that transactions are there that we cannot enter in the subsidiary books. That journal entries can be entered in the journal proper. Here it is not a book, it is like journal entries only. Okay, journal entries. Here, what are the journal proper? What are it here together? Okay, first one, opening journal entry. Okay, opening journal entry, opening entry. We say in short, opening entry. Okay, what is this opening journal entry? Because at the end of each accounting year, we cannot enter everything in the subsidiary books. Some transactions we will all the accounts will be closed, isn't it? All the accounts will be closed, and all the financial statements, that means the trading and profit and loss account and balance sheet will be prepared. Then this balance sheet items will be taken as the opening balance in the next year. Okay, the balance sheet items. So from the closing balance sheet of the previous year will be prepared as a journal entry in the next year beginning. That is called opening journal entry. Here all the assets will be debited. We know all the assets show which balance? Debit balance. Then all the liabilities shows credit balance. Then along with the liabilities, capital also will be showing the credit balance. So we will debit all assets and we will credit all liabilities and capital. That is called the opening journal entry. Okay. Sometimes they may give one, they will ask you to prepare one opening journal entry. I think we have studied this one in the third lesson. Okay, opening journal entry. Okay, here I will show you the example that is given in the book. Okay, example. Here no exercise. Okay. Ramnath carried forward the following items. Make the opening entry in journal proper as on 1st January 2017. Cash, stock, furniture, sundry creditors. Opening journal entry, we know the columns that we need to draw for the opening, that is journal entry. Date, particulars, LF, debit, credit. Okay, then rupees there. Then date we need to write. Then cash asset, cash account data, stock asset, stock account data, furniture asset, isn't it? So furniture account data, sundry creditors, liability. So two sundry creditors. Then if you add, we will get here 10,000, but here 48,000. So the remaining amount will be the capital, because as liabilities plus capital is equal to assets. Okay, so capital is not given, so we need to calculate the capital. Balance of assets and liabilities brought forward. Okay, you have understood the opening journal entry. Then second one, closing journal entry. Closing journal entry. Here, at the end of the year, we will close the ledger accounts. That ledger account balances will be taken to the trading and profit and loss account, isn't it? So that each account we need to prepare how much we have in that particular account, that we will show in the closing entry. For example, one account is their salary account. Okay, salaries account 10,000. So how we will prepare? Salary will be shown on the profit and loss account. So profit and loss account debtor, profit and loss account debtor to salaries account. Because salaries is an expense, it will show debit balance. Now we are closing that one, closing entry. Okay, we are closing salaries account and we are transferring that one to the profit and loss account. So profit and loss account debtor to salaries account. If it is 10,000, we need to write the amount. Okay, then the next one, this opening entry only they will ask many times. Okay, then the third one is adjusting entries. This one we will learn in the forthcoming lessons. Okay, when we start to prepare the final accounts, we will prepare these adjusting entries. I told you one lesson with the final accounts with adjustments. Okay, that adjusting entries we need to prepare. Here, before preparing the final accounts, we should make some adjusting entries. Example, we can say the depreciation. Depreciation is provided on an asset, for example, furniture. In furniture, we need to provide at least 5 or 2 or 3%, whatever be the percentage as depreciation. So, what is the adjusting entries? This depreciation is a loss. So, depreciation is loss, so that will be debited. Depreciation account debtor to, then the value of the furniture will be getting reduced. So, furniture account credited. Okay, depreciation provided, depreciation written off. Okay, that is called the adjusting entry. Okay, then transfer entries. These two only we will learn in that lesson, adjusting entries and transfer entries. Here we have adjusted this depreciation, isn't it? Depreciation account debtor to furniture. This depreciation will be transferred to profit and loss account. So what will be the journal entries? We should debit the profit and loss account since it is a loss. Profit and loss account debtor to, we have to transfer this depreciation. Here we have debited the depreciation, so here we should credit to depreciation account. Okay, here in the, again in one lesson also you will study the depreciation accounts. That is one lesson. So profit and loss account debtor to depreciation account. Okay, depreciation transferred to profit and loss account. Okay. Then rectifying entries. Fifth one, rectifying entries. Here, rectifying means rectification. If we have made an error, that error must be rectified. It must be corrected. Okay. So, that one will be done through the entries only. Okay. So, for example, what we can say, the if we purchase furniture purchased will be recorded in the purchases account. It is a wrong thing. Here we cannot cut that purchases and we cannot write that furniture there. Okay. So it is an error of principle. In order to write the furniture as the asset that we have purchased, we will not enter the purchase of asset in the purchases account book, isn't it? But here by mistake they might have entered this one in the purchases book. So we need to correct that purchases, and this furniture also we should enter. So what will be the rectifying entry? Already we have debited the purchase, so we need to credit the purchase. This furniture only we need to debit. So what is the rectifying entry for this error? Furniture account debtor to purchases account. Understood? So furniture purchased wrongly entered in purchases book, now rectified. This also we will learn in one of the lessons. Rectification of error. Okay, the rectification of error, one lesson is there. There you will learn this one very clearly. Okay. Then other entries, miscellaneous entries, other than this one. Miscellaneous entries. Then all the purchases, okay, credit purchase or credit sale of asset, we will not enter in the purchases or sales book, isn't it? That will be entered in the this journal proper. Okay, purchase of asset, that as we wrote the depreciation, purchase of asset we will not enter anywhere in the any of the subsidiary books, but cash purchases of asset where we will enter in the purchase book. Okay, so here credit purchase and sale of asset. Okay, then any endorsement, you studied in the bill book, isn't it? Endorsement means what? Transfer of title of document. Okay, endorsement. Then renewal of the bill, then dishonor of the bill. All these we must enter in the journal proper. Okay, entries only we need to prepare. Then many other adjustments. I told you, we will learn in one lesson many adjustments. There we learned only one example, depreciation. Many other adjustments are there. Okay, that closing stock will be entered, then interest on capital, interest on drawings, then bad debts, provision for doubtful debts, then that prepaid expenses, outstanding expenses, then income accrued but not received, or income received in advance. Like this, around 14 adjustments are there. Okay, all the adjustments in adjusting entries, adjustments that we make in the final account before making the final accounts. Then if any goods are withdrawn, that drawings, okay, goods withdrawn, cash withdrawn means we will write in the cash book, okay, but if the goods are withdrawn for personal use, this entry only we need to make, which one? Journal proper. Then in the same way, if goods are distributed as free samples, there also we need to prepare journal proper, okay, or any loss occur due to fire or theft or any other spoilages, okay. If anything occurs, this also will be entered in a entry only, but not in the subsidiary goods. Okay, you have understood this one, isn't it, students? This, that the last one we have completed. I think we will mark the question answers. Okay, we will mark the question answers that we have not marked. That two, I think we have marked. Then what is purchase returns book? I cannot tell you the page number, but I will tell under which heading, okay. Purchase returns book. Under the heading purchase returns. What is purchase returns book? Okay. Here. Then I think here you can mark this paragraph. Purchase returns book is a subsidiary book in which transactions relating to return of previously purchased goods to the suppliers for which cash is not immediately received are recorded. Okay. Then here 2-3 points enough. Okay. Third question. Then sales book. Okay, then you can turn the pages. After 1 or 2 pages, sales book is given. Here, sales book, under the heading sales book. That full paragraph we can mark. Okay. What is sales returns book? Sales returns book. After sales book, you turn 1 or 2 pages, you will find sales returns book 6.8. Okay, 6.8 here. Sales returns book is a subsidiary book. That one, that reasons also you can write. After that, 5 points you can mark here. Okay, after the 5 points. The next question we will mark. What is sales returns book? Sales returns book marked. Then what is debit note? Debit note will come in say purchase returns. Under the heading purchase returns only, debit note will be coming. Okay, 6.62. Debit note is a document. Here, debit note. Okay, that full paragraph you mark. Okay, then what is credit note? Credit note will be under the heading sales returns book. Okay, credit note under sales returns book. Credit note is prepared, okay, by the seller and sent to the buyer when goods are returned. That full paragraph you can mark. Okay, seventh one. Then eighth one, what is journal proper? That we learnt today. Okay, after bills of exchange, journal proper. Here from the beginning. Okay, journal proper. Here up to here. Okay. Journal proper is number 8. Then bill of exchange. That is previous to which bills book, no? Bill of exchange. Here under the heading bill of exchange, definition you mark fully. Okay, definition. Then what is an opening entry? Okay, that one journal proper. Opening entry under the heading opening journal entry. Okay, this you mark. Here the third line, journal entry made in the beginning, that is the main one. So here 2-3 points there. Up to here you can mark. Okay, up to journal entry. Then what is an invoice? Invoice we have studied in the beginning. Okay. In the purchases book. Invoice in the beginning. Okay. 6.51. Second line, invoice is a business document. Okay. That. Okay, 11 questions. Short questions. Then format of purchase book we have marked. Mention the subsidiary books in which the following transactions are recorded. Sale of goods for cash. Which book? Cash book. Okay, cash book. Sale of goods on credit. Here, sales book. Purchase of goods on credit. Here, purchases book. Isn't it? Here, when the proprietor takes goods for personal use. Now only we studied. Isn't it? Journal proper. Goods returned to suppliers for which cash is not received immediately. This one, purchase returns book. Okay. Asset purchased as credit. This one, journal proper. All. Credit purchase and credit sale of asset, only journal proper. Now, advantages already we have marked. Now, endorsement of a bill in the bill book. Okay, endorsement. And discounting of a bill given under the heading endorsement. Fully you mark. Okay, endorsement and discounting of a bill. Okay, we have marked all the question answers. 1 or 2 problem will be there without completing. That we will do after once the school reopens. Okay students, you can prepare that because we have learned everything. So tomorrow I will start the new chapter. Okay, thank you very much.